Okay, I'm very excited to have on the Goldstein on Gelt show Stacy Collier, who is a U.S. CPA. She specializes, however, with U.S. citizens who live outside the United States, and she's based in Houston, Texas, and deals with people all around the world. Now, Stacy, one of the things that happens to me a lot is I meet with U.S. citizens who live in Israel, and they proudly tell me about the investments that they're doing in their local Israeli bank, like they buy mutual funds here or they buy ETFs here. And then I have to tell them a little bad news. What's the bad news that I am telling them?
Well, hi, Doug. Thank you so much for having me on the show. And you are right. Investments in mutual funds that are registered outside of the U.S. cause tremendous nightmares for both the U.S. citizen and their tax preparers when it comes to doing the tax return. And what many of them are not aware of is that these investments, by the time you determine the potentially punitive tax effects in the United States, plus their compliance cost for preparing the forms that are necessary, that often these funds are not going to generate any sort of positive return on their investment.
So let's simplify it a little bit, just so that everyone's on the same page, because oftentimes people think it sounds so simple. Let's say that, I'll use my example, an American living in Israel, he's moved to Israel permanently. He goes into the bank and he puts $100,000 into, the Israeli XYZ Israeli mutual fund. A year later, he sends you his tax return and says, "Hey, Stacy, can you take care of this for me?" What specifically is the issue that he's going to have? Because you referred to it as a PFIC, a passive foreign investment corporation. That's also what we colloquially call an offshore mutual fund, yeah?
Correct. The issue is funds that are registered in the United States under U.S. law have stipulations that they have to pay out a certain percentage of the earnings in income to the investors so that it can be taxed, whether that comes in interest, dividends, capital gain distributions. And what we find with the funds that are registered abroad is, of course, they're not subject to that same U.S. requirement. And a lot of the offshore models are actually accumulation, where they don't pay or distribute a lot of the income, but rather the income or gain will be realized upon final sale of that fund and the accumulated value. The U.S. doesn't like that for two reasons. One, they're not able to tax the income now. They have to wait until it's sold. And then two, likely that'll be a capital gain transaction if it's held for longer than a year. And so it's at a reduced tax rate. It'll only be taxed at 15 or 20%. So to level the playing field, the U.S. has put in the PFIC regime, which basically then accelerates the recognition of that income, even though there may not actually be realized income at that point.
Let me just say it back to you to make sure I've got the bottom line here. The issue is that a normal American who buys a normal American mutual fund may earn inside the fund dividends, and there could be capital gains inside the fund. And every year the fund distributes it to the client, and he sees that on his 1099, and then he pays taxes on it every year. But an offshore mutual fund maybe doesn't do that. And then the IRS says, wait a second, we expect to get some taxes every year based on the dividends or the internal capital gains of the fund. And now we're not getting that. So we're going to tax you on this fund differently because it's an offshore mutual fund. Is that what you're saying?
Yes, that's exactly right.
It's not illegal to own an offshore mutual fund. It sounds, based on what you're saying, just like it might be a stupid idea because you'll pay taxes on money you don't even make that year.
That's right. And then the reporting, it's not only, of course, it is a very punitive tax regime, and the calculations are probably outside of the scope of this conversation, but in addition to that is the reporting requirement. Each fund has a 4-page report that has to go with it. So by the time you figure your compliance cost on paying to have those reports prepared and the potential tax that might be due on income you haven't realized, even at this point, it makes it a very punitive investment, unfortunately.
Wow. We're speaking with Stacy Collier, who is a U.S. CPA. She's based in Houston, but she specializes in working with U.S. citizens who live outside the United States. We've been talking so far about this issue of offshore mutual funds, which the official name is a PFIC, a passive foreign investment company, I guess, or corporation. Stacy's been pointing out something which I think is so critical for everyone to realize, that the IRS doesn't make it illegal to invest in these sort of funds, but they just make it prohibitively expensive in terms of taxes and just the pain in the neck of reporting. That it is really very difficult. It's going to be very difficult for someone to try to justify actually buying an offshore mutual fund. What are some of the other important things, Stacy, that you would say when you speak to an American living overseas that he should think about before investing?
Right. So we really try to train our clients to be proactive. I always tell my clients, basically any sort of investment that you make outside of the United States, and that could be as simple as opening a bank account, it's likely going to have some sort of U.S. reporting and or tax implication. And so we really try to get our clients to come to us first and say, hey, I'm thinking about doing this. What's it going to mean for me back in the States? And so we put together a nice little chart that we send out to our clients that just kind of says, hey, are you thinking about starting a pension? Here's some things to consider. Are you thinking about opening a bank account? Here's what you might need to report, that type of thing.
Mm-hmm. That sounds like a very, very useful chart. Could I see a copy of that?
Yeah, absolutely. I'd be happy to get that to you.
Would you mind if I shared it with our guests, all the listeners?
That would
we'll just keep it amongst us. You, me, and all the listeners to the show.
That sounds great.
All right. That sounds like a very useful chart because I think there's so much that's out there that people just, they don't even think about it because it's just part and parcel of their general financial living, which, I mean, I guess they may say it's very reasonable. It's funny. I don't know if you get this in your practice, but sometimes when I tell people about they have to file an FBAR and they get like indignant, they go, why do I have to talk about, they get angry with me, right? Because I'm telling them that there's a U.S. tax form that they have to file. Do you find that sometimes as well?
Oh, absolutely. And a lot of times that indignance can lead to inaction. They don't want to proceed with it. And that's where then, of course, I have to be the bad guy and remind them, it comes with a penalty. Like a lot of these forms, these information forms, the FBAR, the passive foreign investment company forms that we've been talking about, they have significant penalties, up to $10,000 per form per year that hasn't been filed. So it really is not something you want to ignore, and it is manageable. Mm-hmm. I mean, it's not to say you can't open a bank account or you can't make certain investments abroad, but just be proactive and know the costs up front so that you can make sure it is a reasonable investment.
Related to the fine for not filing an FBAR, one of the things I've heard people talk about is not only the fine, but it's actually a tax on the amount you didn't report if you chose not to report it. Is that stack one on top of the other?
That can be the case, yes. I mean, if they find that you willfully were avoiding, reporting the information, yes, they can take a percentage of the asset, up to 50% of the asset can be subject to a fine.
That's pretty scary.
Yeah, it's not anything to play around with. Right. And then you get back to the passive foreign investment company forms. If those forms aren't attached to the tax return, not only are you at risk of a penalty, but then also the statute of limitations on your tax return that was filed technically never closes. That 3-year window of the statute of limitations doesn't start until all of the information returns that should have been filed have been filed. So it's a mess.
This is very scary. Well, let's leave people on a good note. For people who live in, let's say, Israel, outside people who've expatriated, if they keep their money in U.S. brokerage accounts or IRA accounts, this is where I spend this is my day job. I'm a U.S. investment advisor, but I work with people who live outside the U.S. So for people who do that, they say, I may choose to live in Israel, but I also choose to leave my money in America. Are there specific cross-border issues they have, or does that kind of eliminate most of the issues that you've been talking about today?
That is going to eliminate most of the issues from the U.S. perspective because they're still going to be in U.S. registered funds and they will receive a 1099 at the end of the year and everything will be in compliance with U.S. law at that point.
Okay. It's nice to know that you've got everything set up kosher and that it's actually easy to do. Stacy, I see we're just about out of time, but in the last few seconds, tell us, how can people follow your work?
Right. So probably the easiest is to go to our website. It's sdcglobalcpa.com. We do have some blogs or some newsletters you can sign up for. You can reach out to us if you'd like to have a conversation. We're always happy to offer a free consultation to kind of evaluate the situation and see, if you need further help or if you're in compliance.
Okay, so we will put a link to that at the show notes of today's show, along with the document that you said you would send over. That'll make it easy for people to find you and learn more about what you're doing. That's at the show notes of today's show at goldsteinongelt.com. Stacy Collier, thanks so much for taking the time.
Thanks for having me, Doug.
You've been listening to the Goldstein on Gelt Show with money maven Doug Goldstein. Check out all of Doug's money ideas at goldsteinongelt.com. Doug specializes in helping people who live outside the United States handle their U.S. investment accounts. If you have a question that you would like answered on the air or off, contact Doug at his website or send him an email to doug@profile-financial.com.